Hey everybody, today we are going to demystify RMDs, required minimum distributions. You've probably heard about them, you probably know a little bit about them. We want to make sure we dig into it and help you understand everything there is to know about required minimum distributions. Hey everybody, my name is Grant Ellis. I'm the owner and founder of Ellis Retirement Advisors. We help people across the country prepare for, enter, and live in retirement. So let's set the stage on required minimum distributions. You've been saving money your entire life. You've put it into IRAs and 401ks, potentially even some other types of investment vehicles. Now you're thinking about retiring and you're starting to consider where that money's gonna come from, and all of a sudden somebody tells you, hey, are you taking your RMDs? And you're thinking, what in the world is an RMD, first of all? Why do I have to take it? And what's the deal? Let's get into it. When you save money in a pre-tax account, meaning that you have not paid taxes on that money yet, so that means a traditional 401k, a traditional IRA, well, the IRS does not get their money until you take that money out of that account. You take distributions. And so they don't want you to hold that money forever and never pay their taxes. And at some point, based on your age, they require you to take some of that money out every single year for the rest of your life. And that is what is called a required minimum distribution, or an RMD. And for so long, the RMD age was the same for everyone for a long period of time. It was 70 and a half years of age. When you turn 70 and a half years of age, that is the year that you had to start taking an RMD. But over the last few years, a lot of those rules have changed, and RMDs have changed significantly. So first of all, we want you to understand what an RMD is. You gotta take out a little bit of your money out of your pre-tax IRAs or 401ks, depending on the scenario, and you have to do that every single year for the rest of your life. When does this begin now though? If the 70 and a half rule no longer applies, and it doesn't, what is the age that you have to start taking required minimum distributions, which we'll call RMDs for short, in this video lesson? Now that the rules have changed, there are actually 3 different age tiers that you have to look at to determine your RMD start date. And the first is if you are born earlier than 1950. If you're born before the year 1950, you have to start taking required minimum distributions when you are 72 years of age. That's age bracket number 1. The second age bracket is if you were born between the years 1951 and 1959. If you were born between those years, you have to start taking required minimum distributions at the age of 73. And then anyone born in 1960 or later does not have to start taking RMDs until they're 75 years old. So the rules have changed quite significantly over the last few years. And if you're in that middle ground in the years that have changed and you're thinking, well, I'm 71 years old, don't I have to take an RMD? The answer might be not yet. The answer is always at some point. So those are the age ranges that you need to figure out which one you land in, and that will determine at which age you have to start taking RMDs. So let's say that you've decided, okay, I've looked at my age, I've looked at the bracket that I'm in, and I know I need to take RMDs at the age of 73 years old. When do I have to take that? Do I take it at the beginning of the year, at the end of the year? How is it calculated? How does it actually work? We're gonna get into that right now. The requirement by the IRS is that you take your first required minimum distribution by April 15th of the year following the year that you turn the correct age. And I know that sounds really confusing. Let's think about it. Let's say that next year, your RMD age start year, you turn 73 in the middle of the year. Well, you don't actually have to take your required minimum distribution until April 15th of the following year. That's your due date. Now, oftentimes people do take it in advance of that, so they don't have to wait till the very end, but you don't have to. And every year after your initial RMD, you have to take it by December 31st. So it can be a little bit confusing, but the first year, you take it by April 15th of the year after the year that you turn the correct age, and every year following, you take it by December 31st. In reality, what does this look like? At the end of every year, you have an account balance in all of your pre-tax accounts once you're retired. That account balance is used to calculate your required minimum distribution amount. And there's a table every year that they use that's based on actuarial assumptions and other data, and it calculates the exact amount that you are required to take out in the following year. How you take out that money is completely up to you. The IRS does not care. As long as you take out at least the required minimum amount by the date that it is due, you're in the clear. So there are often people that are already taking out distributions from these accounts anyway to help pay for bills. They don't have to worry about these as long as they're covering the minimum amount. For people who don't need the money, which often happens, they still have to take out this amount, but they could do it part of it every month. They could do it once a year. They could do it half once a year, half another part of the year. They can do it however they want. There are no rules as to when you take out the money. Again, as long as you do it by the required due date. Well, what happens if you don't take out the money by the required due date? Some people might say, well, listen, I don't want to take out any money and nobody's going to do anything about it. Not so fast. There are rules and there are consequences. And the rule states that if you don't take out a required minimum distribution or you don't take out enough, you're going to pay a 25% excise tax on the amount that you have not taken out. And I don't know about you, but I don't want to pay any more taxes than I'm legally required to do so. So if I'm required by the IRS to take out a minimum distribution, you want to make sure that you take out the full amount so you don't get hit by the 25% excise tax. And finally, there's a couple of things I want to make sure that you're aware of in terms of small rules that you might not understand. If you work and you are participating in your 401k plan, and you're not an owner, you're not a highly compensated employee, and you're not a key employee, you don't have to take out required minimum distributions until you retire and are no longer working there. Oftentimes we'll get calls from participants in 401k accounts and they'll say, hey, I am 72, 73, or 75 years old and I need to take out an RMD. And we get to bring them the good news that as long as you don't fall into those categories, no, you don't. You can continue to defer your distributions until you actually retire. That's one of the good rules that the IRS has in place. And finally, the other thing we want to make sure you understand is there are strategies that you can use at certain times in your career and life to help you reduce, minimize, or eliminate required minimum distributions. As an example, depending on the scenario, of course, because each person's scenario is different, there are times when we can convert retirement pre-tax assets into post-tax or Roth assets between the ages of 65 and 73 years old. Effectively, when you retire, your tax bracket might go down significantly right when you retire. That can be a good time to do what we call Roth conversions. We go ahead and pay the taxes on those assets now while your tax bracket is low, so that when you get to required minimum distribution phase, you don't get hammered with as much tax as you might have should you defer all of that amount until the very end. But again, every person's situation is different. These are things that need to be analyzed and reviewed with a qualified financial professional to see if they make sense for you. Well, I hope this is helpful. RMDs don't have to be scary. The amount that you take out is actually relatively small, but you do want to understand when you need to take them, how you need to take them, how to avoid the penalties, and some of the strategies that you might want to use at certain parts of your retirement career to reduce, minimize, or eliminate any required minimum distributions that you might have. If this is helpful and you want to talk about what it looks like to work with us, you can click on the link in the description below and set up a time to talk to me directly. I'd love to hear your story and see if we can help. Also, feel free to go to the website, check out all the information, ellisretirement.com, and if you like the video, subscribe and share it with a friend. That way we can help as many people as possible prepare for, enter, and live in retirement. And we will see you next time.